Well, here to talk us through the world's largest jewelry maker's latest results and the outlook for luxury goods as a whole is Sanford Bernstein senior analyst Luca Solca. So, good morning to you. You raised your recommendation on Richemont just last week. How come, and what do you make of these sales figures out this morning?
We expect that luxury goods is going to be a good place to invest in 2010 on the back of a rebound in macroeconomic growth. Looking at the long-term correlation of luxury markets growth and GDP growth, we see luxury market growth of between 5 and 7% in 2010. Add to that the high operating leverage of hard luxury players, and we expect that at the current moment the market is still underestimating the earnings power rebound of hard luxury players like Richemont. Hence the upgrade. Today's sales were quite a good update, a move in the right direction, I thought. The numbers were 5.5 ahead of consensus, as you mentioned, 2.5 ahead even of our own estimates. We see two positive things. One is that the continuing strength in emerging markets, as you were pointing out, but also a positive rebound in the US.
Right.
I think the US rebound is a good sign, is the fact that consumers are going back and that the retail reorders are coming through.
So why are the wealthy spending more? Is it simply a case of their portfolios are looking better, so they're more confident about making big spends?
I would expect that the broader population is looking at a more positive and more stable macroeconomic outlook. We continue to see a very strong component of this coming from emerging markets, but we're starting to see the signs of this coming to developed markets as well. The US first and foremost, on the back foot, I think, very much so. Japan still, and Europe sort of in between.
And China, is it going to be a driving factor?
It is the most important driving factor, I would say, in emerging markets for sure, which I think is also a good positive for the largest players that have established early mover positions in those markets and have put their brands in front of the Chinese consumer.
And we were talking about Russia in the break, and this is a market that seems to have fallen off the map when you talk about luxury goods, in recent months. So what's the status of that market?
Well, very much so. I think Russia's been very important in the past 5 or 6 years, but on the back of the financial crisis, Russia has become much less important. I think that due to the rebound in commodity prices, and most especially oil price, I would expect that Russia is going to come back to a more important role in 2010.
Right. Now, you prefer luxury retailers to high street retailers in 2010. Why?
Well, I think that if you look at consumer discretionary cash flow, this has benefited a lot in 2009 from interest rate cuts, for example, and bringing lower mortgage payments. All of this is anniversarying in 2010, especially if we look at the UK. We have no more effect of that, and we have increasing tax rates, which are going to be a headwind to consumer discretionary cash flow. Which is the money available to consumers to spend on discretionary spend. This is going to be, and has been, correlated in the past 20 years with more subdued like-for-like growth, which at the end of the day is the driver of relative price performance for retailers.
Luca Solca from Sanford Bernstein, thanks very much for joining us.